Welcome to the Daily Globe. Please subscribe and hit the bell icon for more breaking updates. In a landmark decision, the U.S. Supreme Court has struck down the Trump administration's sweeping global tariffs, a move that has sent ripples far beyond Washington, D.C. The ruling marks a pivotal moment in the ongoing debate over America's role in the world economy and the limits of executive power. Almost instantly, the news sent shockwaves through the world economy. Markets reacted with volatility, as investors scrambled to assess the implications for international trade and investment. This decision reverses a policy that, for years, reshaped global trade flows, sparked fierce legal battles, and created deep uncertainty for businesses and consumers alike. Companies that had adapted to the tariffs now face a new set of challenges and opportunities. The tariffs, a flat 10% duty on nearly all imports, were originally justified as a tool to correct trade imbalances and protect national security. Supporters argued they were necessary to defend American jobs and industries, but critics called them an unconstitutional overreach of executive power, warning of higher prices and strained alliances. Now, the Supreme Court's ruling redefines the boundaries of presidential authority, setting a powerful new precedent for how America engages with its trading partners and the global economy at large. The verdict will impact hundreds of billions in taxes, disrupt global supply chains, and affect millions of livelihoods, from factory workers to small business owners, and from multinational corporations to everyday consumers. Tonight, we break down what this historic decision means for you, the country, and the world. We'll hear from those who lived through its consequences and explore how this moment could shape the future of international commerce. This is more than a story about tariffs. It's about the rules that govern our interconnected world, the shifting balance of power in a globalized economy, and the ongoing struggle to define America's place on the world stage. To understand today's ruling, we need to go back to a pivotal moment in recent history, April 2025. This was a month that would mark a dramatic shift in U.S. trade policy and send shockwaves through the global economy. It was then that the Trump administration announced a sweeping, flat 10% tariff on nearly all imports entering the United States. The official justification was to address persistent trade deficits and to bolster national security. But the move was also seen as a bold assertion of executive power in the face of mounting global competition. The administration invoked the International Emergency Economic Powers Act, or IEEPA, as its legal foundation. Traditionally, IEEPA had been used to impose sanctions on foreign adversaries, not to levy broad tariffs on everyday goods. This novel application of the law immediately raised eyebrows among legal experts. Legal scholars, business groups, and even some lawmakers quickly challenged the administration's authority. They argued that the Constitution gives Congress, not the President, the exclusive power to impose taxes and regulate international commerce. Lawsuits and protests erupted almost overnight, reflecting deep concerns about the separation of powers. Despite the backlash, the administration doubled down. Officials insisted that the modern global economy posed new threats that required swift executive action. They framed the tariffs as a necessary tool to level the playing field, protect American jobs, and restore manufacturing strength. Unlike previous tariffs that targeted specific countries or industries, this policy was unprecedented in both its sweeping scope and its reliance on IEEPA. The result was immediate. Global supply chains were thrown into chaos, shipments delayed, and headlines dominated by uncertainty. American companies suddenly faced a 10% tax on nearly all imported inputs. Many businesses were forced to make tough decisions, either absorb the higher costs themselves or pass them on to consumers in the form of higher prices at the checkout. With the stakes so high and the legal questions so profound, it was inevitable that the issue would end up before the Supreme Court, setting the stage for a historic constitutional showdown. Legal challenges erupted as soon as the tariffs took effect. The U.S. Court of International Trade ruled against the administration, declaring that IEEPA did not authorize the president to impose tariffs. Taxation is Congress's domain. The administration appealed, arguing the president needed broad powers to address economic threats. The Federal Circuit upheld the lower court, reinforcing that IEEPA was never meant to grant tariff-making authority. Business groups celebrated the ruling as a victory for the rule of law and a check on executive power. Despite these defeats, the tariffs remained in place pending a Supreme Court appeal. Billions continued to flow into the Treasury, and uncertainty gripped global markets. All eyes turned to Washington, awaiting the Supreme Court's decision. the stakes, the future of presidential power and global trade. In September 2025, the Trump administration petitioned the Supreme Court, arguing that the lower court's rulings crippled the president's ability to protect national security. The Supreme Court agreed to hear the case, setting the stage for a historic decision on executive power. The government claimed IEEPA's language allowed tariffs as a tool in emergencies, while opponents insisted only Congress could impose such taxes. On October 20, 2025, the Supreme Court delivered its verdict. The global tariffs were an unconstitutional exercise of presidential power. The majority opinion reaffirmed that the authority to tax belongs to Congress, not the president. The decision marks a powerful check on executive authority, even in a national emergency. The legal battle is over, but the economic and political fallout is just beginning. The 10% tariffs collected an estimated $159 billion in duties since April 2025, more than double the previous year's tariff revenue. Economists agree, the cost was borne by American businesses and consumers through higher prices. With the tariffs now illegal, the government must refund the entire sum to thousands of companies, a logistical and financial challenge for the Treasury. For many small businesses, these refunds could mean survival after months of razor-thin margins. The tariffs disrupted nearly every sector, affecting goods from electronics to clothing and straining supply chains with key allies. Companies faced a tough choice: absorb costs or raise prices, risking competitiveness. Markets fluctuated with every legal twist, but today's ruling is expected to bring long-term relief and stability. The removal of the tariffs is seen as a net positive for global trade and economic growth. America's sweeping global tariffs sent shockwaves through the international community, triggering a wave of retaliation from both long-standing allies and traditional adversaries. The world watched as the U.S. upended decades of established trade norms, leaving governments scrambling to respond. Diplomatic ties were strained to the breaking point, and trusted trade relationships were suddenly thrown into uncertainty. Countries like the European Union, Canada, and Japan responded swiftly, imposing their own tariffs that specifically targeted iconic American exports, products that symbolized U.S. industry and culture. This tit-for-tat escalation fueled a cycle of protectionism, as each side sought to shield its own economy from mounting losses. American farmers and manufacturers, once reliant on global markets, suddenly found themselves locked out of key destinations for their goods. Global companies, too, faced a new era of uncertainty and rising costs. Investment decisions were put on hold, and supply chains, once seamless and efficient, became tangled in a web of new taxes, regulations, and unpredictable border delays. The result was a noticeable slowdown in global economic activity, with ripple effects felt from Wall Street to small towns around the world. Perhaps most damaging of all was the erosion of trust in U.S. reliability as a trading partner, leaving allies and businesses wary of future policy shifts. Today's Supreme Court decision to remove the tariffs is met with relief and cautious optimism worldwide, as the promise of normalized trade and eased tensions offers hope for economic recovery and renewed cooperation. Yet, the damage to international trust and confidence will not be repaired overnight. Many leaders remain skeptical, and businesses are wary of future disruptions. In response, many countries are now accelerating efforts to diversify their trade partners and reduce their reliance on the U.S. by forging new alliances and strengthening regional supply chains. The memory of this period of instability will linger, shaping global trade policy and international relations for years to come. Expert opinion on the tariffs was deeply divided. Most legal scholars and economists condemned the policy as executive overreach and economically harmful, arguing tariffs act as a tax on American consumers and disrupt supply chains. Dr. Linda Yue warned that uncertainty would stifle economic activity. Some, however, supported the administration's tough stance, arguing the U.S. needed to confront unfair trade practices and renegotiate global rules. Supporters claimed IEEPA gave the president broad emergency powers, but the Supreme Court has now rejected this view. The debate over the balance between executive agility and congressional oversight will continue. The ruling sets a clear precedent: trade and taxation powers remain with Congress. Beyond headlines, the tariffs hit Main Street hardest. Everyday goods, from phones to furniture, became more expensive as companies passed on costs to consumers. Small businesses, lacking the resources of multinationals, struggled to absorb rising costs or adapt supply chains. The Supreme Court's decision and mandated refunds offer a lifeline to many. The tariffs also hurt American jobs, making U.S. manufacturers less competitive and triggering retaliatory tariffs that hit exporters, especially farmers. The removal of tariffs should ease pressure on prices and restore stability, though changes will take time to filter through. For business owners, the ruling removes a major source of uncertainty. This case shows how decisions in Washington directly impact wallets and communities nationwide. The Supreme Court's decision is a landmark reaffirmation of the constitutional limits on presidential power and Congress's authority over trade and taxation. Refunding $159 billion to importers will be a massive task, but it injects capital back into the economy. The ruling removes a major source of global friction and begins the process of repairing diplomatic and economic damage. This episode is a lesson in the real-world impact of trade policy and the importance of rules-based, transparent governance. The saga underscores the dangers of protectionism and the need for cooperation in a connected world. The debate over fair and free trade will continue, but the process must follow constitutional channels, not executive decree. The decision calls for renewed commitment to open markets and the rule of law. Understanding these principles is essential for every citizen in today's interconnected world.